Welcome to the Real Vision Daily Briefing for Thursday, July 22nd. I'm Samuel Burke, joined by my co-host, Jack Farley in New York. And in Massachusetts, we have trader and manager of the Real Vision's exchange. For the first time, Petr Pinkhasov, welcome to the show. Petr, we want to hear a little bit more about your journey, but first, I want to give you a preview of what we're going to put to you today. Of course, we're tracking that story about the surprising uptick in jobless claims in the United States, but really it has to do with automakers more than anything else. Jack, what are you tracking?
Well, headaches continue for the Chinese ride hailing app Didi, which fell 10% in US markets. This, as it learns, it could face a fine of up to $3 billion. Samuel?
Yeah, more than that $2.8 billion fine that Alibaba, of course, another US listed Chinese stock, faced not that long ago. The other story that I know Peter's keen to talk about, Bitcoin maybe finding its bottom, stabilizing at $32,000 after unsurprising backing from Cathie Wood, Jack Dorsey, Elon Musk, all in the same venue, but new details coming out about their holdings. We'll be taking your questions if you're on the exchange, which Petr runs, or if you're watching us on YouTube or the RV platform. We'll be putting those questions to Petr. And Petr, before we jump into the stories and get your analysis, just give us a little background. I know you have an extensive background in trading, but tell us about your journey and how you came here to Real Vision.
Yeah, sure. So thank you all for having me. It's been really, really fun getting to know a lot of the community, especially on the exchange and off the exchange. My background has been working, that I've been working in is basically trading at hedge funds and family offices for the last 10 years. 6 years of that is full time. So have some experience doing long short equities as well as commodity futures, treasury bonds. So I've been quite active in that. So looking forward to really driving home some analysis and some of the things that I did in my past for the Real Vision community going
Well,
forward.
let's get you to drive home that analysis right now. So expectations were for 350,000 jobless claims for the week ending in July 17th. They really blew far past those expectations, 419,000. Let's just put this in perspective, though, because it really all has to do with the automakers. Once a year, car factories reset, and in those weeks, their workers actually come off the payrolls and they collect unemployment. That's not expected this time of year, but because of the pandemic, the shortage in chips for cars, it's happening now. So you saw big upticks in places like Detroit, Michigan, exactly where you'd expect it for car makers, Kentucky, Texas. I mean, that really all says to me short term. Petr, when you look at those numbers, what does it tell you about the big picture?
Yeah, so big picture, economically, I think we're going to see this more often where prints are going to come in more on the downside. And that's because we just had such a boom after COVID where the government kind of stepped up and intervened. And how we track our data is usually on a quarter-over-quarter or year-over-year basis. And we're in that kind of late July, August period where it was really booming last year. And Jack, I know you put up a chart that is really, really interesting to me that showed that a lot of the estimates from analysts about this jobs number came in less than expected.
Yeah, thanks for teaming me up, Petr. Let's take a look at that chart, which shows exactly that in fact, every analyst of the 41 analysts in the Bloomberg Economics survey missed the mark. They had it ranged well below 400,000 for all of their estimates, and it actually came in at 419,000. So as you can see on this chart, it is a pretty epic miss. Let's put that chart down. And I have to say I agree with both of your analysis that this isn't necessarily a cause for concern. It's often a refrain from economists, analysts that jobless claims or the labor market is something of a lagging indicator. That is to say, it's a snapshot of the past rather than a portent of the future. And I think that going back to Samuel's point about the automotive issue and the chip shortage, that really was a huge problem that we weren't getting these semiconductors, these chips from Asia that were integral to the production of vehicles. And that's why companies like Ford, like GM, were warehousing these vehicles where they were completely ready except for the chip. They were just waiting for them. That's why we had this huge rise, huge surge in vehicle prices, both new but particularly used. And one thinks of the Manheim used car index. That actually has started to roll over the past 2 months. So perhaps that part of the inflation story is transitory and likewise shouldn't be a cause for concern. Samuel?
Yeah, I mean, at the end of the day, I think what really surprised me is that for so many weeks, you've heard people saying, what's really causing wage inflation is the fact that you have people on these extended rather job benefits, and that's coming to an end. So me, like so many other people, like the people who were surveyed, were thinking, all right, that's finally coming to an end, and you're finally going to start seeing those numbers coming down. But it just shows that so much of the cyclical nature is not following its cycles. On the whole inflation deflation debate, Peter, where do you fall?
Well, I think some of the points that you mentioned are absolutely right. Labor is a lagging indicator, and I think right now it's an interesting time in the market where you're seeing a lot of things, especially in the reflation trade, getting leaned on the 10-year yield right now. So there's a lot of correlations going on, especially in small caps right now, where basically I feel like the market is leaning on the 10-year yield for that gauge. Now, on our end, I see a labor shortage really everywhere. Every time I drive, I see anyone trying to hire somebody for $15, $20 an hour. Construction costs are, because obviously lumber has just absolutely skyrocketed in recent times. The housing prices are going up. We're really interesting to see if that's going to impact wage pressure in the future, because that might be a reinforcing factor where home affordability might be really, really low right now. So either two things have to happen. One, home prices come down, or two, wages go up. And if wages go up, which is probably the more realistic situation, that probably is a stimulatory or a reflationary kind of factor going forward.
Yeah, that's really interesting, Peter. About housing specifically, we have recent data from Zillow showing that the cost of rent increased 7%. Admittedly, that's year over year. But that part of the market, owner-occupied rent, which amounts to 25% of the inflation index, the consumer price index, that really we haven't seen an increase in that. But of course, we've seen this momentous wave, this surge in pricing for housing in terms of the actual price of buying a house. The price of buying a house typically leads rental prices by somewhere around 6 to 12 months. So the question is, are we going to see that rise in rental prices as well? Samuel?
Yeah, I mean, just anecdotally, when you have trying to get a contractor to come to your house and you have to spend weeks and weeks and weeks, actually months. I mean, it does tell you, paint a picture quite clearly. But Jack, before we switch gears and move on to the next story, I know there's a soundbite that you wanted to play for us, so I want to get to that. You want to tee that up, Jack?
Yeah, well, I think a lot of the people that we interview on Real Vision are very well respected people. They're either analysts or they've written a book or something. But what I think is my favorite part of Real Vision is when you actually interview traders, people who have made money consistently over decades. And that is someone who I interviewed today, Noel Smith, who's a proprietary trader who really has just generated phenomenal returns for himself and his clients over the past 25 years. And Samuel, to be honest, I think a lot of people watching Real Vision have that dream, have that goal of making 30%, 40% returns for themselves on a consistent basis, which kind of sounds like a pipe dream. But to some people, it's actually a reality. So I think Noel is something of an aspirational figure for a lot of people who are watching Real Vision. So definitely something to check out. This clip that we're about to show is I asked Noel how he was positioning into Monday. Of course, on Monday, we had something of a flash crash in equities and really equities globally as yields fell and there was concern about Delta. No one really knew what it was. I asked Noel, how was you positioning for Tuesday? Were things going to be brighter, or were you going to take risk off the table? So let's take a look at what Noel said.
So when you get a hard spike in vol at the close of business yesterday, at the bottom of the market, drawdown, what do? Do you buy the dip? Do you de-risk, or do you get short? And you can express that in bonds, copper, SPY, Qs, whatever you want, because there's some kind of correlation between all of them. What we personally did is we de-risked a lot. Now, that's not to say that I didn't expect a bounce today. I kind of did. But we don't really ever trade on gut feel or what we think. Gut feel is really an algorithm for your past wisdom, right? And you have to, in order to get gut feel, you have to be a market participant for a very long period of time. And that gives you a gut feel. And if your gut gets punched enough, you change your algorithm. So when you get
Peter, I want to direct this to you, because there we have Noel saying that he thought that, that there was going to be a bounce back, but he positioned himself for making a reversal, that there was not going to be a bounce back. And that reminds me of something you told me recently, Peter, which is that you were short energy in your own trading about 2 to 3 weeks ago. But now I understand that you're long energy. So I just want to ask you the question: how do you go about making these changes within your portfolio of going long, short something to the exact opposite?
Yeah, it's a strong opinions weakly held, right? One of the things about traders is we need to build conviction to really generate returns, because if you don't have conviction, then what else do you have? So this idea that that pivoting is not easy. It's one of the most difficult things, and to make that decision is quite hard. And I think in the interview, I think it's spot on where you can tell by the language that he came in, he had conviction, and as a trader, sometimes you have to pivot and sometimes you have to hold. And in that case, somebody was playing for more downside. You have to respect that. I mean, it doesn't always play out, but when I'm looking at something and I'm already in a position and it's coming, we obviously had quite a big decline over the last 2 weeks in energy, ExxonMobil, COP, obviously those were the big decliners, and especially in the refining space, Holly Frontier, that was a big decliner as well. These things that have come down, and some of the things that we were talking about earlier in the show was this idea that you might get this opportunity for growth and reflation, and some of those things that might benefit is energy, and that idea didn't really come to fruition until earlier in this week maybe. And when those things click, well, you have to pivot yourself, because like I said in the beginning, strong opinions weakly held.
Yeah, I should mention this is on the Essential tier, available for all Real Vision Essential members. Petr, what you said, it puzzles me a little bit. I want to get into it. Why were you short 2 or 3 weeks ago, and what was it that made you recently say, I'm into this? Because the narrative was the exact opposite. Why are you sort of swimming against the tide here?
Yeah, well, you had a lot of things in energy that might have been, well, I don't want to use the word a lot, but you had some things in energy from not only a positioning standpoint, but OPEC as well, where you could have seen a sharp decline. I think that the sentiment was quite strong for, more growth and, leisure stocks, big cyclicals continuing to rise. And they already had really, really strong gains into this year. So from a positioning standpoint, it was very hard to just buy them at the top. But I'm sure some people did, and I still think that trade might be okay given where we are now. But for the most part, at that time you had some big countdowns from a DeMark standpoint. We can show that chart in a little bit, but from a technical standpoint, we were exhausted. Sentiment was completely bullish, and you had OPEC news that they were going to increase production in the medium term, and those basically three factors led me to take a short position in energy.
I just keep on coming back to that point that I brought up a couple of weeks ago, that, I mean, the Emiratis making it quite clear that they think that long term, well, they want to cash out now, and they want to invest a lot of the money that they're getting in this picture frame in alternate energy sources and just diversifying their economy. I keep on coming back to that over and over again, Jack.
Yeah, well, I look at it from the ESG perspective, Samuel, which is that the amount of there are a lot of people who think that what ExxonMobil and coal, natural gas, I mean, what they do is rendering much of the earth uninhabitable, and the number of those people increases day by day. I will say, Samuel, with regards to the Middle East, I think there is a very powerful person in the Saudi prince, the Saudi prince of oil, said today that Saudi Arabia will get drain dry the last drop of hydrocarbon of oil. It will be Saudi Arabia. So I think there are some people in Saudi Arabia who are very into divesting and giving that money to SoftBank so that they can invest in WeWork and Uber and the like. But there are those who say, hey, we have the best natural reserve of oil, and let's take advantage of it. Samuel, you're going to say something about, should we move on to China?
Yeah, I mean, you know that I'm always across the China tech story, whether it's Alibaba or continuing to be Didi. Basically, what we're seeing now, more and more, we're getting a clearer picture that China is upset with these companies, Chinese companies that have been listed in the United States, not necessarily for listing in the US, but more to do with data disclosure and data requirements they have because they list in the United States. I want to read you a list, Jack and Peter, of what Didi is now facing. Of course, ride-hailing service, similar to Uber. Uber has a stake. What Didi is facing as a result of their IPO. in the United States. Suspension of certain operations in China, introduction of state-owned investors, a forced delisting or withdrawal of Didi's U.S. shares, or a fine that could be bigger than the fine that Alibaba paid of $2.8 billion. I was speaking to one of the leading researchers, analysts for one of the biggest financial institutions in the world recently, and asked him, well, what do you make of China at this point, given all that we've seen with what's a sudden shift? He was careful to say it's not such a sudden shift. Essentially, what's been happening is that some Chinese companies weren't taking the advice of the Chinese Cyber Administration. And basically, this is China making it very clear, you're going to follow us all the way through. But what he said at the end of the conversation was basically China is so opaque for him at this point that he really doesn't have a strong view anymore. He just is not thinking of China because so much can change so quickly, as we've seen here. So, Peter, I'm interested to get your take for the folks that have diversified their portfolios, tech in the United States, tech in China, and you see this happening. At the end of the day, I'm still asking myself a fundamental question: whether these delistings happen or not, how they happen, these companies still have incredible revenue. When you look at a company like Alibaba, nothing here is saying that they can't keep on shipping products all around the world. So taking those two factors into account, where's your view?
Yeah, Samuel, I think that broadly, regulators and policymakers and people who are responsible for some of the China financial regulation, I think the worst thing that can happen is that you get a delisting, and I think that's a negative expected value bet. I think that will just cause chaos, and I don't think that they're trying to cause chaos. I think what you said was right. Was according to the Bloomberg article that I read today, that Didi was basically asked to keep everything on the quiet, but it ended up being one of the hottest IPOs. I really think that they didn't follow the script that was set for them. But what's interesting is that I think all the eyes are on Didi. But some of these prices, like you said, are really quite attractive. I mean, Alibaba is, to me, trading like Google was in 2014. I think that there was just a large mandate to get out of these things because of some of the risks that you're talking about. If you're a pension or whatever, or a hedge fund, and you have investors who are worried about some of these things, you're going to de-risk. You don't necessarily like to do it. But I think a lot of that price action that we've seen is a lot of unwinding mandates. And some of these stocks do look quite attractive, but we have to understand that there are always those black swan risks. And basically what we've seen over the last 2 years is this is a market where anything can happen. Negative oil, negative interest rates. So don't put it out of the cards that a delisting can't happen. But I do think that it's a negative expected value bet based on where valuations are.
And at the end of the day, at least things are much clearer now from China about what they want from IPOs, where they want them to happen. They'd prefer them to happen in a place like Hong Kong as opposed to the United States because of data. So at least we have a much clearer picture now. And I keep on saying we should have been watching closer to IPOs that were canceled, like Seoul, a major social network, which I talked about with Rex Woodbury here on the exponential age, for instance. We should have had a closer eye when all of a sudden, literally 24 hours before they're about to IPO, they were canceled. There were some canaries in the coal mine, Jack.
Yeah, definitely. I think it's easy to look at this story and say that the Chinese government, they are so strict, they are so onerous. I think a case could be made for the exact opposite, that the Chinese capital markets operate like something of a Wild West, and the Enrons of the United States happen every 5-10 years, but that there are multiple in China at this very moment. There's so many stories about a forest REIT that owns essentially a logging company, and the trees didn't exist. The dye company, the factory doesn't exist. It's interesting to me that it actually isn't American investors who are raising the alarm bell by being very demanding higher standards for disclosure, but it actually is the Chinese government who is raising the alarm bell for the exact opposite reason. But Peter, I want to ask you, how are you viewing China? You mentioned Alibaba is a bargain. To expand on that, and maybe we can put up the chart of the iShares China ETF.
Yeah. So at the end of the day, I think execution is quite important, especially if you're an investor. And yeah, these valuations are quite interesting, but timing them is obviously an important factor as well, because nobody wants to take 10, 20, 30% heat or even 50% heat going forward. How I view markets is basically through the DeMark indicators. And recently, we just had a 13 combo countdown in MCHI, which basically means is that we have the possibility of a trend reversal for the next 12 bars at a very high percentage. So I'm looking for this range to hold, for some confirmation here from a price standpoint, to maybe even diversify in some other China names. JD is also a very interesting one as well. Baidu is a little bit interesting for me. A lot of my trades are also based on valuation cases. I don't obviously want to tell anybody what to do, and I'm not a financial advisor, so keep that in mind. But I put a value on it at around $200 a share last summer. Things haven't really changed from a top line growth perspective. So that one isn't too interesting to me, but Alibaba and JD are definitely pretty interesting down here, given where MCHI is from a technical standpoint.
Yeah, I should say all these DeMark indicators are like ancient Greek to me, and I'm sure they are to many of the people watching them now. But if you want to learn more, we don't have time on the daily briefing, but you should definitely check out the exchange where Peter does a breakdown of them. Samuel, sorry, I interrupted you.
No. Perfect tee up for the exchange, because Ralph Humphrey over on the exchange, which you manage along with Weston, says, I'd like to hear your breakdown, your Bitcoin bottoming call, as well as discuss your brand of technical analysis, Peter. So just to remind folks, this all started on Twitter. We saw Elon Musk and Jack Dorsey tweeting each other. Kathy Wood stepped in and said, all right, let's make this happen. And it happened yesterday, a big discussion. And basically, they have very different views of cryptocurrencies. But at the end of the day, Elon Musk disclosed that SpaceX does have Bitcoin holdings that he's not selling, or SpaceX, I should say, is not selling anytime soon. Major backing. It isn't surprising from these folks, but to hear that he has holdings in Dogecoin, for example, and Ethereum, just a lot more details coming out. But that's a stabilization. What about for the big picture, Peter? Does this actually, a conversation like this, really affect Bitcoin outside of this 24-hour window?
The timing of Elon Musk's tweets at the highs make me say that, yes, these conversations do matter. As a speculator for the last 10 years, my initial kind of response to that would have been no. But we basically saw Elon the news trigger that wave of selling back in February. But now we're seeing, I don't know if we can pull the chart up for Bitcoin versus the US dollar. Right now, we're seeing something very similar as the China names. We're seeing a 13 combo countdown completed at the lows. We're starting to see a pop back up on a narrative where Kathy Wood is starting to get more interested, Elon's with SpaceX. And if we do get some price stabilization, you never know with Bitcoin. It's one of the most volatile assets, obviously up an exponential amount over the last 10 years. Very, very interesting level to me. This 32,000 area is what I'm looking for it to hold for, given where the DeMark indicators are.
All right. I'm gonna keep on going with more questions. Erica Frith, explain negative expected value bet, please, Peter.
Sure. So basically, in gambling theory, a negative expected value bet would be, if you do that bet over 100 times, 1,000 times, in the end, you would probably be a net loser. So that's all I mean, is I just don't think that kind of bet would be profitable over the long term.
If I may expand upon that, I think you said that with regards to betting that Didi would delist. So that is to say, betting that Didi would go down or shorting it. I remember, was it Luck and Coffee, which had huge fraud problems? People who shorted that stock, obviously you want to short a stock that is revealed to be a fraud, right? They had problems because they had bought put options on something that ended up being delisted. Or I'm not sure if I have my facts straight, but how do you go about analyzing the risk and reward of shorting something when the thing you're shorting might not even exist the next day?
Yeah, that's a very difficult one. Obviously, short selling overall is one of the most difficult things ever, and we have some amazing guests in the main Real Vision content that described their process and their workflow. I am not a short seller, and I don't know how to short sell well. When I do short sales, it's mostly sector-based, factor-based. I think this sector is going to underperform. Shorting individual companies to zero has got to be a skill set in its own, and I completely respect people who are able to do that, have conviction, and hold. Because there's obviously carry costs involved, commissions. Your broker is going to jack margins for your short, especially as volatility goes up. And your upside is only making that 100%, whereas if you're long, basically your upside is unlimited. So lots of props and hats off to short sellers out there for being responsible speculators and doing what needs to be done. I think Samuel brought up this idea about this opaqueness in China names. That makes it even harder because, where does the shareholders' equity go? Me, as somebody who likes Alibaba, for example, I'm still looking at the balance sheet and see that opaque shareholders' equity and cash flows, thinking this doesn't all completely add up 100%, but it looks okay. So, there's a grain of salt with some of these names, especially in China.
At the risk of you repeating yourself, we had a question coming in from Prius Omega. Is investing in China worth it? The rug being pulled out from under you in a flash seems risky. I mean, that is exactly what this analyst was telling me from this major financial institution that I was referencing, that it's very hard. Long term, yes, he was agreeing with the point that Peter and I keep on coming back to. Revenue. Do you really think revenue is going to dry up at Alibaba, given these types of concerns, given that the Chinese seem to be signaling quite clearly that this has to do with data at the end of the day? So certainly the viewer is right that the rugs has been pulled out, but getting back to those fundamental questions about revenue, you mentioned JD, Baidu, Alibaba. That's what I keep on coming back to at the end of the day, Peter.
Yeah, I think that the rug pull, maybe what the question was regarding was maybe a rug pull on a delisting, because that would be quite catastrophic. And I think, from an execution standpoint, I think it's all about sizing at the end of the day, right? Obviously, the worst way to end your investing career is to go all in on Alibaba and on margin, and then they have a delisting, and then you lose all your money. That would be just catastrophic. But if you put on a 1 or 2% position in Alibaba and it gets delisted and goes down 50%, it's not the end of the day. You survive to live another day, but that 1 or 2% position probably means that you're not going to make huge gains or whatever. So it's all about comfort level and level with risk to me.
And just to drive the point home about what the Chinese are signaling, we're getting very specific details that China was upset about data from Didi, again, the ride-hailing app, revealing information about where government officials were moving in Didi. So this really shows the how much of a value the Chinese are placing on data. They really are taking this seriously, to the tune of being able to have companies' valuations drop incredible amounts. They place data privacy at a much higher value than that. Jack, any other viewer questions you want to bring in?
I actually was not looking at them at all. Sorry. Do you have anything?
What is your future outlook? Chris Battenfield asks on jobless claims. Go back to what we were talking about earlier. Significant impact to inflation, transitory debate. I think you answered that a little bit. If you just want to elaborate, Peter.
Yeah, I think that, I'm quite optimistic. And I think one of the points that you made earlier regarding, this narrative that people have about people are being comfortable with staying on unemployment, I don't think that's necessarily true. We're not really seeing that in the data. I'll have to see next week if this was really just a one-off, given some of the data regionally that we're seeing with the automotive narrative as well. But I'm quite optimistic. I think that unemployment should trend lower, especially if wages start to come up here and people are more incentivized to take that job. Especially maybe even some of these municipalities offer programs where people get a bonus to go back to work. I'm not sure if we really. I remember people talking about that. I'm not sure if that has been put into place anywhere, but it's. I'm quite optimistic on it.
One other viewer question to throw at you. Vittorio Cotorini says, "Are there any specific regions you're observing right now? What's your view on Europe?" Good question, especially considering we got what I would say clarification from the European Central Bank today. We've talked about in the past couple of weeks how they moved their target before inflation always had to be below 2%. Now they say 2% or above, but also saying that the bond buying will continue to march 2022, Madame Lagarde saying that she continues to view inflation as transitory nonetheless. But I think for me, what I see is a clearer picture coming out of Europe. I mean, just really hammering home in much clearer fashion, especially compared to what we saw in the United States with the Feds trembling all of a sudden in front of inflation. We haven't really had that here in Europe. Is it a fair assessment that you think Europe's we have a bit more clarity over on this end of on this side of the pond? And what is your view in Europe? Vittorio wants to know.
Yeah, with Europe, I think that their central bank narrative is quite aggressive. They're very clear on their intentions to do whatever it takes. Today, we saw the euro trade initially higher, but now back on the lows. Given that whatever it takes narrative, some of the European banks are quite interesting, especially if the Bund and the German 10-year starts to stabilize. Quite similar to the factors that we're seeing here. Maybe revenue and top line margins can start to come up in some of these banks, like DB, for example, was up close to 5% yesterday on that ADR. It is interesting to me. It's not a sector that I'm completely focused in or have any expertise on that subject matter. But I think the risk reward is quite similar to a lot of the regional bank names that you're seeing here as well. And I think overall, the reflation trade is more or less dependent on where these sovereign yields are versus any one region. And where that alpha or that gamma is going to be is basically in the currency, most likely, where you get outperformance in one. And those things are quite hard to predict, beforehand. And it's not something that I have analyzed yet, but maybe next time we go on Real Vision, I can discuss it.
And I can just tell you, the travel industry back really on a knife's edge here in Europe. I mean, the regulations have come, gone, and now come back again with the Delta variant, and the travel stocks really continuing to be hammered. Petr Pinkhasov, manager of the exchange here at Real Vision, Jack Farley, thanks for joining me here on the Daily Briefing, and thanks to the viewers for your comments. We'll see you right back here tomorrow.
Thank you very much.